UBS agreed to acquire Credit Suisse for $3.3 billion.
Because, one big banking card easily starts tipping over other cards.
Now, after the series of banking failures in different countries, we Indians are obviously scared and searching for safest short-term investment plans where we can generate decent returns also. Now, first you have to be very clear about why you are investing, or better usage of the word is why are you parking your money for short-term investment. It must be for your short-term requirements, which may pop up within few days, few weeks, or even few years. Now, for such requirements, the primary purpose of investor is to look for safety of principal rather than trying to earn the best returns possible. Starting off with the first one, which is obviously the bank fixed deposits. Bank FDs up to 5 lakh rupees is insured under the DICJC, which is Deposit Insurance and Credit Guarantee. Now, if the bank files for bankruptcy,
खत्म हो गया यार मैं तो
your sum of 5 lakh rupees is insured and secured. Now, if you look back at the Indian banking history, the failure of big banks like PSUs is the rarest of rare events. Second on the list is post office savings account and term deposits. Now, post office term deposits have sovereign guarantee. Hence, whatever money you keep with post office is completely safe. Post office offers various types of term deposits like 1 year, 2 year, 3 years and even 5 years. You can also opt for NSE, which is for 5 years. Third option on the list is overnight mutual funds. It is a debt mutual fund which invests in bonds of shortest maturity of 1 day. Now, this implies that its portfolio is simply cash and it is always changing. Investors should also be aware of additional risk even if this type of mutual fund has the lowest chance of capital loss. Interest rate risk is obviously the lowest here. However, due to volatility, you may sometimes end up with lower returns like savings account rate. Don't expect more than your savings account interest rates. Now, all the AMCs offer these funds. You can choose any AMC of your choice. Now, as the maturity is of just 1 day and your expectation is just equal to savings account, this product may be a better choice for you. However, since few months the bond prices are falling, even overnight mutual funds also generated decent returns of around 5%. I am talking about 1 year return. Next on the list is liquid mutual funds. The next level of safe debt mutual funds are liquid mutual funds. Now, as the name suggests, invest predominantly in highly liquid money market instruments and debt securities of very short tenure and hence provide high liquidity. They invest in very short term instruments such as treasury bills, which are T-bills, commercial papers, which are CP, certificate of deposit, which is CD, and collateralized lending and borrowing obligations, which is CBLO, that have maturity of up to 91 days to generate optimal returns while maintaining safety and high liquidity. I am also suggesting 2 mutual funds. You can cross check your portfolio before investing it. First is of course the quantum liquid fund, not the quant one, but the quantum liquid fund. Second is Parag Parikh liquid fund. You may expect slightly higher returns than savings account and overnight funds. Use this category when you need the money in short term but unsure of your exact date. Next on the list is treasury bills. Money market instruments issued by Government of India to finance its short term investment requirements. Now, various types of treasury bills like 14 days, 91 days, 182 days and 364 days. The minimum of 25,000 has to be invested by individuals willing to procure a short term treasury bill. Furthermore, any higher investment has to be made in multiples of 25,000 rupees only. They do not carry any interest. Instead, while investing, you have to buy them at discounted price. At maturity, you will get the face value.
अरे कहना क्या चाहते हो?
Okay, so let me take an example for this. 100 rupees of face value of treasury bill may now available at 95 rupees. You can invest 95 rupees now and at maturity you will get the face value of 100. The 5 rupees is your gain by investing in treasury bill. You can buy them directly from RBI Retail Direct or through some brokers like Zerodha, my favorite. Beyond these products, rest everything carries certain amount of risk. Hence, if you are capable of digesting the risk and understanding those risks, then go ahead. Because at the end of the day, the primary purpose of short-term investment is to protect the principal but not to look for high returns. That's it for this video. Hope this information was useful and I will see you in the next.